Financial planning helps us monitor our cash flow. In this video, I will guide you how to prepare a financial plan. There are two important components in constructing financial plan, namely the sources of incomes and expenses. Income consists of active income and passive income. Active income is main income such as salaries, allowance, commissions, and other financial resources. Whereas passive income consists of rent received, interest received, dividends, and other investment. After you fill in active income and passive income, we count the total monthly income. After this, we minus fixed monthly savings. Normally, it's 10% of monthly income. So income balance, we write here. After you fill in income balance, you can fill in monthly fixed expenses such as rent, insurance payments, housing loan, car loan installment. Then you write monthly fixed expenses. And we also have monthly variable expenses such as petrol expenses, groceries, home utilities, allowances for parents, and so on. So you fill in here and total monthly variable expenses, fill in here. Last, we will check whether we have surplus of income or not. So how to find it? Income balance minus monthly fixed expenses minus monthly variable expenses. If the number here is positive, means we have positive cash flow. So must remember there are two important components in constructing financial plan: income and expenses. To know further what is financial plan, let us look at example 1. Miss Tan works as a teacher at a school. Her monthly net salary is 3,200. She sets aside 10% of her monthly salary as a fixed monthly savings and 200 as a saving for emergency fund. The table shows Miss Tan's monthly fixed and variable expenses. Complete the financial plan for Miss Tan. First, we need to fill in the net income. So net salary is 3,200. Total monthly income is 3,200 because she doesn't have passive income. So she set aside 10% of her monthly salary as a fixed monthly saving. So 10% of 3,200 is 320. And also she saved 200 as emergency fund. So now income balance is 3,200 minus 320 and minus 200 equals 2,680 ringgit. Okay, now minus monthly fixed expenses. So car installment is fixed expenses. So we write here and fill in 400. House rental is fixed expenses. So fill in 800. Total monthly fixed expenses is 1,200. Okay, now we find out monthly variable expenses. The first one is toll payments, 160. Petrol expenses, 300. Groceries, 400. Home utilities, 200. And allowances for parents, 350. So total monthly variable expenses is 1,410 ringgit. So now, how to find whether got surplus for income or not? So, income balance 2,680 minus total monthly feed expenses 1,200 minus total monthly variable expenses 1,410 ringgit. There is a surplus of income 70 ringgit. Example 2, Miss Tan plans to buy a laptop which costs 3,000 in 10 months. And based on Miss Tan's financial planning, can she achieve her financial goal? Miss Tan can achieve her short-term financial goal of buying a laptop which costs 3,000. Total monthly saving equals 320 times 10 equals 3,200. She still have a surplus of 200 from her needs of 3,000. B. Does Miss Tan use the SMART approach to achieve her financial goals? Justify your answer. Still remember what is SMART? Specific, buy a laptop. Measurable, it costs 3,000 and requires a monthly saving of 300 to achieve the goal. Attainable, can achieve a monthly saving of 300 from a total income of 3,200. Realistic, monthly savings of 300 is only 9.38% of the total income of 3,200. The last one, time bound, within 10 months. So Miss Tan used the SMART approach to achieve her financial goals. Miss Tan is promoted at the end of June in the same year with a 5% salary increase. The amount of her other expenses is fixed. What is the effect of Miss Tan's salary increment on her financial goal? You can refer to example 2. When the salary of Miss Tan is increased by 5%, the saving in the bank can be increased. This can help her in purchasing the laptop in less than 10 months as planned, since other expenses are fixed. Example 4. Mr. Silva intends to buy a house in 5 years. He plans to buy a double-story house priced at 500,000 with down payment 50,000 ringgit. A. How much is the monthly savings that Mr. Silva must save in order to achieve his financial goal? Monthly saving needed by Mr. Silva is equals 50,000 divided by 5 years times 12. So we need to count monthly. So that's why 5 multiply 12. Because at 100, 33 ringgit, 33 cents. For Mr. Silva, saving RM at 100, 33 ringgit, 33 cents every month to achieve his long-term goal is not difficult with total income of 4,000 ringgit. B. Is it wise for him to buy a house priced 500,000 with his current financial planning? Justify your answer. So we look at here, the income balance is 3,000. Monthly feed expenses is 1,360. Monthly variable expenses is 1,640 ringgit, and surplus of income is 0. So it is not wise for him to buy a house priced 500,000 ringgit. Why? Because his monthly housing loan installments can burden him due to high expenses. So we estimate he need to pay about 2,000 plus ringgit for house installment. So it is quite burden for him due to his high expenses. Thanks for watching. If you like this video, make sure to subscribe for more.